I'm 680 News Senior Business Editor Mike Eppel. We got some very interesting jobs numbers in from Stats Canada this morning that pointed to a struggling economy for the month of August. In fact, the Ontario headline was 80,000 jobs lost last month. Now, that sounds bad, but economists were quick to point out that over the previous 2 months, the Ontario economy had added almost an equivalent amount of jobs. And overall, the provincial unemployment rate is still well below that of the national average, which is now up to 6% for the month of August. Canada in its entirety lost about 51,000 jobs, another head-scratcher, but that was preceded by July's jobs growth. And economists are saying that all of this kind of smooths out to a still growing labor market overall. And the number of job vacancies right now across the country, north of 400,000 according to some estimates. This will likely keep the Bank of Canada raising interest rates modestly, but all of that is still dependent on the NAFTA file. If the trade talks somehow break down, they're expected to continue next week. That could be a major dent to the economy, but in the meantime, the economy continues to grow. More tough goings for Tesla today. From a financial standpoint, at least, the stock was down the most in 2 years. It tumbled after Elon Musk was featured in a podcast out of the United States where he appeared to be smoking marijuana, talking about all things Tesla, electric cars, electric airplanes, all sorts of things. But it just added to recent activity by the CEO of Tesla, following tweets about taking the company private and interviews with the New York Times and some questions whether or not there needs to be a new CEO at the electric car company and let Elon Musk continue as the sort of genius behind the scenes. Shares of Tesla also dropped today because the chief accounting officer, which just joined the company less than a month ago, quit because he can't handle all of the public scrutiny going on with everything that's going on at Tesla these days. Tough week for Canadian markets. The TSX has actually been down 6 days in a row. It was down about 1.5% this week. Concerns about the energy trade across the country, with the price for oil, Canadian oil, trading at its steepest discount to U.S. prices in about 5 years. This all comes back to the issues with the Trans Mountain Pipeline, among other things. Now, it is going to result in a break at the gas pumps going to the weekend. The folks at Enpro telling us that gas is coming down by 3 cents per liter tonight to $1.32.9. Energy stocks were weak, and Wall Street today sold off as well after U.S. President Donald Trump again talked about slapping more tariffs on Chinese exports. And for all of the headlines regarding the Colin Kaepernick ad debuted by Nike this week with the start of the NFL season, and the initial reaction from Wall Street taking Nike stock down by 3%, at the end of the day, for the week, Nike was break even from an investment standpoint. From the 680 Newsroom, I'm Mike Eppel for City News.